Ever get that feeling when you're looking at your pay stub and you're like, wait, where did all my money go?
Oh, yeah.
We're going deep on something today that affects all of us, even if we don't always see the full picture. Social Security and Medicare taxes.
Right.
And we're using the August 2024 tax reduction letter article to guide us.
Okay.
Now, we all know about that 6.2% Social Security deduction that stares back at us from our paychecks, right?
Yeah.
But what's often hidden is the employer's contribution.
Right.
It's like the secret handshake between the government and your company.
Yeah, you're right. It's a good way to put it. The employer matches that 6.2%, meaning for every dollar you earn, 12 cents is going towards Social Security, even though you only see half of that directly deducted from your paycheck.
So using the article's numbers, if someone hits that 2024 wage ceiling of $168,600, we're talking whopping $20,906 going towards Social Security.
Yeah.
With the employee and employer each kicking in their share.
Right.
That's a significant chunk of change.
It is a lot. Yeah, and it's important to understand why this structure exists historically. This shared responsibility, it was designed to create a sense of shared ownership in the Social Security system.
Okay.
With both employers and employees contributing.
So it's not just a random money grab.
Well, not exactly. There's a social contract element to it.
Right.
However, that employer contribution often gets overlooked, which can lead to misconceptions about the true cost of Social Security.
Yeah.
Even if you're nowhere near that wage ceiling, this hidden cost, it affects everyone.
Yeah.
Think about it. Businesses, they factor these expenses into their pricing,
Right.
which can impact everything from the cost of goods and services to wage negotiations.
It's like a ripple effect throughout the economy.
Yeah.
Now, for our listeners out there who are self-employed, this is where things get really interesting.
Yeah.
The article highlights how you end up wearing both hats in this whole tax scenario.
Right. If you're self-employed, you're responsible for both the employee and the employer portions of the Social Security tax,
Okay.
totaling that full 12.4%.
So instead of splitting that 20,906 Xers with an employer,
Right.
self-employed individuals are looking at that whole chunk coming directly out of their earnings.
Exactly.
Oof, that's gotta hurt.
Yeah, it certainly makes you think differently about where every dollar goes.
Yeah.
But there is a logic behind it,
Okay.
even if it's not always welcome news at tax time. The idea is that when you're self-employed, you're essentially acting as both the employer and the employee.
Oh, yes.
So you take on the financial responsibility of both sides of that Social Security contribution.
Okay, I see the logic, even if it stings a bit.
Yeah.
But the article also mentions something called a multiplier for self-employed folks.
Uh-huh.
What's that all about?
Oh, yeah, the 0.9235 multiplier.
Okay.
It sounds more intimidating than it actually is.
Okay.
Essentially, it's a way to adjust self-employment income to more accurately reflect the amount that would be subject to Social Security tax
Right.
if it were earned through traditional employment.
So it's like leveling the playing field
Exactly.
between traditional employees and those who are self-employed.
Precisely. The multiplier ensures that the self-employed aren't unfairly overtaxed or undertaxed relative to their traditionally employed counterparts.
Gotcha. That makes sense.
Yeah.
It's all about finding a balance, I guess.
All right.
But let's shift gears a bit and talk about the future.
Okay.
Because, well, it's looking a bit daunting based on those Social Security projections the article mentioned.
Right.
These numbers are enough to make anyone nervous about their future paychecks. So we've uncovered this hidden world of Social Security and Medicare taxes and those projected increases in the wage ceiling. It's got us all wondering, what does this actually mean for our paychecks, a few years down the line?
Yeah, well, it's a great question. And that's where, understanding the numbers can really empower you to take control of your own financial future. So let's take a look at a few examples from their article. By 2027, that ceiling is projected to hit $188,100.
Wow.
If you're someone on track to hit that income level, it means potentially paying over $2,000 more in Social Security taxes compared to someone at the 2024 ceiling.
Wow, over $2,000.
Exactly. And these increases don't stop there.
Right.
The projections go even higher for the following years.
Yeah.
But, instead of getting overwhelmed by all this, let's focus on what we can do.
But
the good news is forewarned is forearmed.
So what are some practical steps our listeners can take now, knowing that these increases are on the horizon?
Well, first and foremost, incorporate these projections into your budget and your long-term financial planning.
Okay.
If you're self-employed, explore potential strategies to manage your tax liability. This might involve how you structure your business or exploring different retirement savings plans.
That makes sense. Knowing the rules of the game can make a big difference in how you play it.
Absolutely. The article hints at various tax mitigation strategies, but that's a whole other deep dive for another time.
Right.
The key takeaway here is that understanding how these taxes work and planning ahead
Yeah.
can make a significant difference in your financial well-being.
It's all about being proactive rather than reactive.
Right,
Yeah.
exactly. And remember, this information isn't just for those approaching the wage ceiling.
Yeah.
Everyone, regardless of income, is impacted by this system, even indirectly.
This has been a real eye-opener, Social Security and Medicare taxes.
Mm.
They're not the most exciting topic at the dinner table, but they're undeniably important.
You got that right. And as we've seen today, knowledge truly is power when it comes to navigating the complexities of these taxes and planning for a secure financial future.
Couldn't agree more so to our listeners out there. We encourage you to take what you've learned today and start planning.
Yeah.
Whether it's adjusting your budget, exploring different savings options, or simply staying informed about future changes, every step counts.
Mm-hmm.
And remember, you can always revisit the article we discussed today. We'll link to it in the show notes for a refresher or to dive deeper into those tax mitigation strategies.
Excellent point. And as always, if you have questions or want some personalized advice, don't hesitate to reach out to a financial advisor. Until next time, thanks for taking this deep dive with us.